Hello and welcome to the Harwood Report for November 20th, 2017, presented by Trade Academy. I am your host and the founder of Trade Academy, Keith Harwood. Let's get through the disclosures. All services and content are provided for educational and information purposes only and are not intended as legal or financial advice. None of the stuff that I talk about here should be considered trade recommendations. It is all stuff that I am looking at. Do your own due diligence. Options have risk. Consult with a financial professional before executing any trades. We have a short week here, folks. We have a holiday, and that's why we're going to do this a little bit quicker this week because, frankly, when things are this kind of weird going into a holiday, there are some trading opportunities, but at the same point, I don't think anybody wants to get overly aggressive, and that's myself included. I'm not looking to get overly aggressive with anything because some stuff trades a little funky. That gives an opportunity, but it also means that sometimes things don't behave the way I would expect, which reduces some of the potential for my upside. With that little caveat, let's just get right into the charts. Well, first things, fear and greed, still very neutral here. I'm not really that worried about fear and greed here at 49 a week. It was neutral. Yesterday was a little bit of fear. You can see on Friday afternoon there was a little bit of selling pressure. It's probably a little bit of risk off just going into the holiday week with people taking some time off. I don't think it's anything to be too concerned about. And let's look at the way that the charts kind of played there. So Thursday was an excellent day as Japan started to play a little bit better, tax reform started to get a little bit more in focus. Friday we had a little bit of a pullback, but we didn't breach the 20-day moving average in the S&P 500. There's nothing too concerning there. It may have felt bad at the time, but at the end of the day, this wasn't that bad. Today we're up a little bit. I wouldn't be surprised to see a new all-time high this week, frankly, but I also wouldn't be surprised to just see sideways action. So if I'm going to play something bullish here, I'm going to be looking out at least to the December 1st expiration and probably to December 8th because I don't want to pay a lot of theta. Going through the other sectors, we've got the Qs. We know that that's been really the strongest, and today it's getting a little bit of a pullback. This fits with that just basically position reduction on a holiday week play, in my view. It means that basically people aren't necessarily buying FANGs this week because they're long them. So you might get a little bit of short covering in some individual names. The Qs may be a little bit flatter as a result. IWM is a little bit firmer because that's been a little bit of the worst performer. The last 2 days were both very strong, actually, and this I think is justified. If we get above Friday's high, 149.03, and hold there, 149.09 was the high today, then there's nothing to me that says we shouldn't necessarily go above 150 this week. So all in all, I think that generally speaking, this week I'm a little bit bullish equities. Vacation week, there's nothing too crazy coming in the market, barring something that does come into the market that's a bit crazy, such as an accelerated tension with North Korea or something weird like that. But this week, really, the key to me is going to be the Fed meeting on Wednesday. That's going to be driving the dollar rates and all that sort of stuff. Speaking of rates, we've got TLT here. It's been a bit of chop here the last 2 weeks. Had a nice uptrend, quick pull down, and then right back up to those highs. I don't have a strong bias on up or down here. TLT I expect to go down based upon the fundamentals of rate hiking cycle. But, the last dip just got bought up. So until we get either back below these key moving averages or above these recent highs, I think TLT is kind of a no trade for me. Wednesday could break us out of this little tight range, this bit of consolidation, because we're going to see the Fed meeting minutes. We've got Yellen talking tomorrow. Maybe that gets us a little bit of movement. Until then, this is kind of a no trade, especially on a holiday week. Let's go to precious metals. Maybe there's something a little more interesting there, and I think there actually is. Dollar yen, below the 10-day, below the 20-day, below the 50-day, touched the 100 and 200-day basically, and bounced as there's a little bit more of a risk on tone to the market today. Well, that's fine. It still looks weak overall, but the bounce today maybe puts a little bit of selling pressure on the precious metals, and boy, did it. And we thought that Friday looked good, and then today looks terrible for gold. So in spite of only making up about half of the move in dollar yen from Friday's break, gold has completely retraced Friday's rally. And gold had an amazing rally on Friday. It outperformed every other precious metal thing. So it gets me stuck here because it tells me that the market may be a little bit too long gold, maybe a little bit too excited about the potential for the upside for gold. And that any bounce in dollar yen can create this much drop Now, if we get any follow through in dollar yen and get back above those key moving averages, there's a chance for a collapse in gold this week. And so that's what I'm actually looking at now. Is a move back above the 50-day moving average and really a move back above Friday's high. It gets us pressing against the 10 and 20-day moving averages here. That could really make gold fall out of bed. And so what I'm thinking here is that gold, I think it's going to test 120 this week. And if dollar yen rallies, we're looking down there into the beginning of next week. Fed meeting minutes matter. That's going to be the key. Wednesday's the key. Wednesday could cause dollar yen to break and gold to rally right back out, cause the move into TLT. So I'm going to be very cautiously looking at the bear side of gold to start this week. Silver's even worse. See the move up on Friday and the move down here. We're already testing some of these lows. You know, I've been looking for this kind of move back here below 15.5 in SLV, and I honestly wouldn't be surprised to see it this week. I'm not going to play it with options that expire this week because even though they're only a penny, it's probably a waste of a penny once I add in commissions. You can play it with some 15.5s that expire in a couple of weeks and get a little bit more of a high probability leverage. But I think SLV is an interesting spot to play with some cheaper puts. And that's because volatility is so low. Let's pull up the charts here on SLV. So we can see how low this volatility is, 17.5%. It really bottoms out around 17%, and the upside's up to the 20% range. And the realized vol has been right there with it, especially with the kind of move we had today. Today's move, 2.25%, that's more in line with a 35% volatility level. So we're getting an increase in volatility. I think that means the volatility, implied volatility increases here. GLD, same way, but a little bit lower volatility. So my play, looking at it, I'll look at this one only for today, but the 15.5 puts, they're cheap as well. But for GLD, my play is going to be looking at something like these D-Safe 120 puts. That plays right up against that 200-day moving average, and on a break towards 118, they would quadruple in value. It's a very easy, simple way to do it. Staying with a 9.5% vol, not touching the stuff that's 10, 11% down here. Because into a break, volatility normally doesn't get picked up. GDX, on the other hand, is a even lower volatility, but this can't perform until GLD and SLV show a little bit more strength. So into a rally in gold and silver, I will then start to reevaluate this, probably looking to December 29th, 24 calls for 13 cents. But I have to first see some sort of support in the actual underlying metals. Just because gold and silver jump back, where gold, GC pushes back up above $1,300 an ounce, doesn't mean that the miners are necessarily going to get a bid. The miners really need to see some sort of continued strength so that we can get a little more confidence that they will make money for a while, not just for a day on a bounce in gold. So this tends to happen a little bit slower. This front vol here, 16.5, 17.5, 19, none of this matters to me. It would be a better play for me, honestly, to look at like really short-dated puts if I was going to go for something cheap here. 16% volatility on the November 24th, 22 puts. Maybe we could actually see that this week if silver falls out of bed and gold falls out of bed. But for the upside, if gold and silver start to show some strength and dollar yen starts to weaken, I'll look back into these December 29th, 24 calls. So I've got two ways to play this now. Gold and silver continue to fall down. I'll look for these short-dated puts, these November 24th, 22 puts, because that could actually really create some problems for the gold miners. And you may actually start hearing people talking about some of these gold miners going into complete failure. Junior gold miners have gotten hit harder today because they often do when gold and silver are weak, because they are more leveraged to the price of gold and silver. That doesn't mean that I want them more so than the regular gold miners. I mean, in fact, when I look at these charts, GDX looks, very sideways. Maybe it presses up against the lows here around 22 before breaking the 22 level. GDXJ, it's a little weaker. It's already at those 52-week lows. This would be likely to be the first to come down, but it's already outperforming on the downside, and it really is going to stay highly correlated to GDX. So if I'm going to play on the bear side, it's GDX puts. If I'm going to play on the bull side, it's a couple days away in GDX calls. And I like the GLD and SLV puts as well. I talked about those GLD December 29th puts, I think it was. I'll go back to them again. Sorry, December 8th puts. December 8th, 120 puts around 52 cents. And then we'll talk oil real quick. So again, not going to spend a ton of time on all this stuff because a lot of this is still a couple days away and we're going into a less liquid trading environment. Oil did exactly what it needed to do, pulled back to the 20-day moving average and bounced. So this is a bullish market for me where it's buying. You're seeing some people buy the dips. Today it dipped and it didn't fall out of bed. So what happens if I go from USO to XLE? That doesn't look nearly as good. That's a much bigger pullback. That means that maybe I can get an opportunity in XLE if vol is cheap. It's not, unfortunately. OIH, even worse. But, a move from 24 to 26, you can leverage that even if volatility is not incredibly cheap. A move from 67 to 70, I can leverage that even though volatility is not particularly cheap. So let's first look at the XLE vol. You can see that it's up at 16.5%. Peaks out around 20%. That is normally going to be actually in a rally, not in a break at this point, just because of the way the S&D is changing. The low is around 13%. I'm not getting a huge edge in volatility, but I'll keep it simple here. If I go to January, notice that the discount of January relative to March, you can make a very simple trade. Those 70 calls right here are 14.5%. It's down here. That's not bad. Then if I wanted to pair something off with that, I go to December. 70 calls are 15.7%. It's not a bad trade. So if I buy the January 70s and sell the December 70s, I'm getting a bullish exposure without really having a bad volatility. So what that looks like here, if I actually put it out in a simpler sense, is this versus this right there. 32 cents to get bullish exposure, so slightly long delta, where I'm buying cheap vol and selling expensive vol. That seems like a really good do to me. So that's something that I'll look at here after I jump off the video, but that's kind of it for the week, guys. We went fast, but generally speaking, I think the markets are going to continue higher this week. Gold and silver and TLT are all going to be dependent upon what happens on Wednesday with the Fed Open Market Committee meeting minutes. I've got some teenies I might play at GDX. Otherwise, the higher probability stuff on the downside is really in GLD and SLV. And if these guys bounce because dollar yen starts to get weak, I will look then at the GDX calls, but I'm going to need a little time. So that's where I'm going to those December 29th options. In the meanwhile, we've got oil. I can play it for a bounce all on relative value of volatility because volatility is too expensive to go long and not necessarily expensive enough to go short outright. But I can do some spreads and make some good money maybe on some calendars there. So that's it for the week. Reminder for everybody. This is freezing on me. There we go. That one. So I do this free one every week. I also do a premium newsletter, and I talk more in depth about some trade ideas, a lot more like what I was talking about today in XLE, where there's some nuanced stuff with volatility, relative value, and things, because that's actually where I find that I can get a little bit more leverage in the market. Buying something cheap and selling something expensive instead of just getting some of these cheap market options like we get in GDX right now. Anyway, I do that. I also do a Wednesday update for all subscribers. And I'm giving you guys a free month if you want to subscribe today. So it goes for $49 a month after that. But if you sign up for a month and you don't like it, you just cancel. If you do like it and you're getting value out of it, then you continue on at $49 a month. It's a great deal. There's no risk since it's free for that first month. Check out tradeacademy.co/Harwood Report to sign up. And as always, you can email me, keith@tradeacademy.co, or call me 312-600-8004 with questions. We'll talk next week, and for those of you that are on the premium product, I will have that newsletter out shortly. Thank you very much. Talk soon.